You're watching Master Trader Live, simple market analysis and education to help you make money in the markets. Join us live each week on YouTube and see past episodes at Master Trader Live. And now your show hosts, Greg Capra and Dan Gibby.
Welcome, everybody. We've got another great Master Trader Live ready to go. Today, we're going to be talking about maximizing your trades with moving averages. Why do we need moving averages when it's price that we trade? Sometimes that question gets asked since we are not indicator-based people. We focus on what matters, price, action. So I've said it many, many times. Visual aids. Is there a way to speed up the analysis with a subjective, the word indicator is sticking in my throat because yes, it is a type of an indicator. But as you set up your screen with something other than what's on price, certain things can be helpful. Now, you might say, well, I find a MACD helpful or a stochastic or an Ichikumi cloud. Well, okay, I can get that, where you put something else on there, but is it stopping you from seeing what really matters? So there will be times where even something as a moving average could create a thought, and that's what is on your screen, right? Which starts with prices. As you look at that chart, it creates, based on what you know about charts and what you've learned, right? Once you put that thing up there, if you don't know anything about anything, it just looks like a bunch of bars going up and down. Until you understand what's really support, what's resistance, what's a trend reversal, and so on, you're going to get, excuse me, distracted. And so you even do have to reach a certain level to say, hey, that moving average at this point in time is really a subjective piece of information that in a sense is irrelevant. Because how many times have you seen prices slice through a moving average that you believe to be resistance or support, like it wasn't there? So as you start to put anything on your chart other than price, it can create false beliefs about what can happen. And that's what happens with the indicator-based methodology. You use one indicator, maybe a second, maybe a third, you start to change settings, and it just becomes a mass confusion. And that's what it personally was for me, trying to figure out which was the right indicator and which were the right settings. And eventually I had to remove everything from the chart. And there was my light bulb moment as to saying, hey, this is what's moving around, and why are prices moving as they are, which leads to other conversations, of course, but you have to be really careful about what you put on your chart. That's going to create a belief about buying or selling or what can or cannot happen. So let's take a look at that.
All right, good afternoon. All right, good background there. So yeah, we're gonna, I mean, it may sound like a very boring subject today, but I guarantee you in our 1 hour of allotted time, we're gonna drastically change and improve the way that you are gonna think about this. Let me get my annotate. So, we call it secondary, and Greg, mentioned objective, subjective. Yes, it's objective existence because of what it is. It's just measuring the closing price of X data spots ago. But I'll get to it down here. So this is our technical approach to trading anything that moves. Price is king. We need a pattern. We start with a compelling pattern, and then we overlay these other concepts. Greg already touched upon many of them. So where is it in the trend? And support and resistance. What are multiple time frames saying? What are the broader markets doing? And then we have volume. I kind of put these two together because they're both what we call secondary. We don't need them. But as Robert said, yeah, why do we need this? And for some reason, the immediate thing that came into my head, Robert, was, well, we drive an automobile and we don't need cruise control, do we? No, you have the accelerator, steering wheel, and brakes. But we're going to show you how our objective use of them is going to not only, it's going to speed up this analysis, which once you get to the seasoning stage is quick anyway, but it's a plus, it's an additive, as you'll see in these many examples. Greg talked about this. There's no moving, these are not moving averages. These are calculated proprietary concoction. And as Greg says, it gives you misleading information. I don't know what to do with these things. I mean, prices are going through, I'm crossing this. I am better off removing all this stuff and just trading price action alone. That's what we're making our decisions on. This price is king. What's the trend, etc. So if you get rid of this garbage, I can answer some of those questions. Here's a buy setup. I don't know what the trend is, but gap breakdown, breakout failure, but you get the picture.
Whoever thought it up, I'd just say it's another big brain, but there's a lot of different settings in there, and what it's trying to do, if you understand it, kind of makes sense. But as you get past it and see it's how it doesn't work and how it is subjective, it's like, why would you ever put it on there?
Yeah, so we've touched upon a number of these. So it's the subjective interpretation, which is false. Many people think, oh, it's at the 50 MA, that's magically support for some reason. Well, why? Why is a squiggly line measuring the closing prices of 50 closing bars divided by 50 support? It's not. I'm going to show you a chart here Greg gave to subscribers a while back. And you hear it all the time on CNBC. We have a death cross. We have a moving average crossover. Well, if the underlying moving average is irrelevant without the proper context, and now you're crossing another one, how does that magically produce more information?
And it just creates more questions. Meaning, why are those two moving averages important? Death or golden, or whether they're simple moving averages or exponentials or what have you. All of these questions lead to uncertainty.
So we use simple here. You're going to get many examples, but this is a picture of a daily. And I'll show you these right here. So on our daily chart, we use the 20, 50, and 200. Weekly chart, 20 MA, monthly 10. And Greg can get into it in a few moments if he likes of why we pick these, because it allows you to visualize the trends on different time frames. But so those are these three. The 20, 50, 200, we keep the same colors. We use simple moving averages. But here's some concepts, as we always do. We layer into the information that we're going to build on. So the slope of the moving average is an indication of trend strength. Okay, that makes sense. So we call these short, intermediate, and long-term trends. So the short term, 20 and 50, 20 days of data, 50 divided by the respective number, is plotting this line. So I get that. Rising 20, rising 50 is telling me that I'm in a strong uptrend. That's a fact. But so let's jump down here. Moving averages are just guides. We've said that over and over again. We never, ever do anything without price. Price tells us when to act with the setup. So Greg, what's this? What we just said, Greg, that crossing moving averages are ridiculous. So what's your point here about converging moving averages? And what do I
Right.
do with it?
Well, the media or whoever doesn't explain why, from an objective, clear point of view, why you would pay attention to any moving average crossover. What we're going to show you today, and Dan said, short, intermediate, and long-term trend. Well, how is that? How is that relevant to which time frames, which trend? So, that 50 MA, Dan said I might tell you, I'm going to tell you, is equal to the 10 MA on the weekly time frame. And this 200 MA, the red line, is equal to the 10 MA on the monthly time frame. So what does this tell me without any prices whatsoever? The daily trend is up, the weekly trend is up, and the monthly trend is flat. And it was in a downtrend because these moving averages were down below it. So what does that mean? Inflection point from a master trader point of view. Well, if they're all coming together, that means you have multiple time frames coming together. What does that mean on top of that? Well, you have short-term traders, intermediate-term traders, long-term traders, all having views that are culminating at an inflection point. And now, if you learn how to read price bars, candlesticks, and you see an event or something bar, as Dan calls it, at these converging points, it's an igniting situation. So now you've got all of these traders, institutions with similar beliefs that have wound the spring that are now exploding into a certain direction. Now, we'd have to add more concepts to that, but that's a powerful idea and concept.
Very, very good, excellent points. So just some more information here. So that these are the three. This is our clean, simple daily chart. Color-coded candlesticks, volume, and a couple moving averages. Can we take volume and moving averages off, as we said? Of course. But they, as we said, they're secondary. I mean, the fact that this igniting bar from a consolidated, I have many examples. Notice that it's been going sideways for many weeks. So that has caused the 20 MA to flatten out. Intermediate term is up. So I can take these bars off. And I can tell you with certainty, I have a bullish consolidation and an uptrend. But am I trading that? No. Here's my, unless you're in it with sell covered calls, that's not what we're talking about today. But here's volume. Here's my igniting gap breakout. Here's another consolidation, and here's my breakout after a little gap negated. But see how we're using price. So when we have a strong uptrend, we want the 20 comfortably above the rising 50. The reason I say comfortably, and we're going to show you how the distance as price gets farther apart from the 20 or all major moving averages, and then the distance of the moving averages are getting farther apart from each other. That's visually telling us it's getting climactic. Start tightening stops. We're going to manage them a little differently. All right, so Greg, here's our beautiful, well, it's not my beautiful, it's the media. So here's two examples that this is right out of our advisory letter where we give stock and option trades to subscribers. This is Greg's detailed in techno-fundamental market analysis over the weekend with videos. And you mentioned the media talking about these death crosses. So why don't you just elaborate some more in a real context?
Well, what's a death cross? So for those that don't know,
okay.
Death cross is the 50 MA crossing under the 200 MA.
Okay.
Is there magic there? So it's saying, okay, here's, if you approach it from the point of view just explained, If this is the intermediate term trend and it's crossing under the long-term trend, well, that's a negative. Okay, but if prices have been declining for, say, the last 3 months,
Right.
and now it crosses and it's near support, McFly, hello, it's already gone too far. Whereas if it was going flat, and Dan Benjamin is asking that he loves moving averages, how do you stay out of choppy markets? Separation between actual price and the moving average, something else. Well, you don't need anything else. If you see price bars overlapping each other back and forth like that, obviously it's chopping around. Now, is it chopping around while the moving averages are pointing up or pointing down? Or are the moving averages intersecting through the middle of the prices while they're whipping back and forth? That's indecision and it's craziness. So you want to trade trending markets. If you have markets that are flipping back and forth like that, they're great for credit spreads because there's indecision there. So you stay away from it. And now in this case, here was this death cross right here, where it crossed under it. Prices have been moving down for a while. They become climactic. Now there's a retest. There are going to be buyers here. They stepped up again and up it went.
Yeah, so this is significantly different than the contracting breakdown that we just talked about. Let's look at the chart way the heck up here. So this 50 MA has been declining for a while because that's how and now we're far from the 50. And you look at the chart and that started building a bullish retest pattern. The absolute worst time to get in, this would have got you in at the low.
Right. And when they, just in all fairness, when you hear the media or anybody referred to a death cross, they're just pointing out that something bearish has happened. They're really not saying to act on it, but what they are telling you is that this event has created a belief, and now you should believe, if it's bearish, you should believe prices are going to go lower. And here's a real example. It totally wasn't true. Just the opposite happened.
Right. Yeah. So this third point, disregard it unless there's a pattern in alignment. So we're going to come back to this little JHG, whatever the heck you are. So just look at it. Look at it. What we've been talking 18 minutes already, and you've learned a lot in 18 minutes. We haven't even gotten into a bunch of chart examples yet. Look what's happening with these trends. So now we're going to come back at the end and put the candlesticks on this and see where see if these moving averages speed up the analysis with a tradable pattern. Here we go. We'll get through as many examples as we can. We always reserve time to look at the real markets, answer questions, etc. So, I just call this bullish turns at the 50. Now, let's just look at it, discuss it, and then we could talk about tradable setups. So, Greg, we talked about the angle, right? So let's focus on this red line at a 45 degree. That's telling me I don't even need to look to the left. That's telling me I am in a long-term nasty downtrend on the monthly chart. It's a fact. I had declining 50. I had declining 20. I'm not doing anything. This crossover is totally meaningless, but it's getting on my interest list as trying to find a bottoming pattern on a long-term, beat up stock. Came down here at the 50. Is that a tradable event? Well, I don't want to get in too much on tradable events right now. But now, Greg, why don't you talk about price action with, here's an example of converging 20 and 50. Here's a retest 20 and 50, and then, you can finish off here if you want.
So the 50, again, remember the definition of what we're looking at. 50 bars add them up, average it out. As you get a new one, drop off the old one. That's a simple moving average. So as it's dropping off this data, and there's more data in the same area, the moving average flattens out close to current prices. Now the 20 MA is doing the same thing. So these two moving averages are converging at a certain point where over time, all of averaging out, the closing prices are coming together in this area. Okay, fine. That doesn't mean you do anything. Now, as we start to look at patterns and we see a drop and a move back up, and now it's tightening up and so on, and we apply what we call bar by bar. This one piece of information is guiding me to a thought that says the spring has now been wound tight enough that something should happen. What should happen, Greg? Well, it should go up or down now. And so now as we look at the price action, this little dip suggests to me that there are buyers on the dip. And because it's beginning to make a higher low, I believe that's going to be the same case. So what about the 200 pointing down? Well, yeah, it's in a longer term downtrend, but there's been this recovery, and I'm looking at this like it's going to try and go up. Now, why did it stop there? Self-fulfilling prophecy. A lot of people look at moving averages and these exact ones. And so it creates a belief that it's going to stop at that point. And then it pulled back. Here's the 180 reversal. What's a 180? Well, one bar went up, another one went back down. So it broke down and it came back up again. What do you do with that? Nothing. You wait. So we have these patterns, 1, 2, 3s, 1, 2, 3, 4s, which is here, this is just a deep reversal pattern into this resistance. Things are improving. And you see like that bottoming tail bar next to that green bar, that tells me that's now an action point.
Absolutely. Beautiful.
That's supposed to go up at that point. And what about the 200 there? It's meaningless at that point.
Yep. It's right. Take it off. It's meaningless.
Right.
And then now these three flat moving averages after everything we just talked about, with this double bottom retest with two ugly red bars ignored. And this is what we call a bull 1, 2, 3 continuation. I wish I knew what stock this was, because I would love to see what it did. But based on our discussion on this chart for 5 minutes, I would think that this would be a home run entry for a big move, maybe to $15. I don't know, 50%, bagger on this setup. All right, let's continue. We got many examples. So this one, look, we started with converging MAs, broke out, slop.
I'm making that box, Dan, to point out to Dan Benjamin that asked about, slop, as you said. How do you determine that with the moving averages? And there's a great example. Prices went up, they went down, went up, they went down, and the moving averages are intersecting through the middle. Leave it alone. Move on.
So have all these flat MAs, but this got our attention. A breakdown failure, not an action point, it's an observation. Now, it takes patience depending on how long you watch something, setting alarm, et cetera. I mean, this I would know would take a long term to set up for a nice swing trade. But now, top of the range, going sideways again. But now look at our moving averages, folks. Flat. Now see that the longer the moving average is, the slower moving it is. Right? That's common sense. Because I have 200 days of data, I'm only dropping off one bar and dividing by 200. So this one's slow but flat. But my my 50 is starting to rise. My 20 is now at a 35-degree angle. And here is my bullish 1, 2, 3 igniting breakout. So would I buy the identical trade right here without the moving averages? Yes. But these beautiful arrangement of moving averages is a plus because they're giving me additional information of what's happened and what is happening.
And as we said, it's to speed up the analysis. And I mean, one of the biggest things, I think you would agree, Dan, is when we create this picture of what we're looking for, and those moving averages are on there, as we're flipping through our minder, looking at various charts, in a split second, that's the picture I want. That's not the picture I want. Move on, move on. You go on to the next symbol, and you're looking for the picture. Once you learn the picture, right, this moving average alignment with this price pattern and so on, you catches your eye instantly.
Yeah, so this is actually a closed trade. I can tell by the colors and format that's in our advisory letter members area. Now, we gave this as a core long, and so it must have, we haven't used the term price void yet, but what that means is for longs, look to the left, and it has a lot of room to run on for a core on multiple time frames, daily, weekly, monthly. And so this was an igniting breakout again from a big bottoming pattern. But we had a beautiful 10-day run. So I'm guilty of that, and we just took our money 10-day swing gain, 29 points, 10 days. And many examples. We'll just do as many as we can. So look at the 200. It's slowly up. Okay, so I'm starting with, I already know, a long-term uptrend. The distance of this 20 and 50 is telling me that whatever happened to the left, it got extended. Right? That was one of our concepts, right? The distance and angle from the moving averages together. So, this, you can see it fell down hard. And it's doing another rebuilding, multi-month rebuilding. 50 has come in and flattened out. 20 has flattened out. Where's my action point? When I get a pattern. Here's my action point. A bottoming tail, I want you to visualize, at the low of the day was an ugly red bar, and then close back up at the high. So that's telling me this is primed, and this is our concept of a price void. Look to the left. There's insignificant resistance. And okay, so this was stock. We give stock and option trades, of course, to our advisory subscribers. Bought the stock, breakout daily, weekly. We always give the technical setup. We give the stop loss. We give management in between. Held this for 8 days for $500 swing gain.
Yeah, and let me answer Don here, because he's posted something to this effect twice. But Don, since you're in the green room, you see how I display my 5-minute charts, because you're asking about smaller time frames. So one of our basic MTS concepts is, and I'll use this terminology, intelligent moving averages. Well, what makes them so smart? Well, it's not that they're so smart. We're smart. Right? But the point is, as just explained, short, intermediate, long-term trend, right? 5-minute chart. What do I have in my 5-minute chart? 20, 60, 200. How does that relate? Multiple time frames. Same thing I explained. Different time frames, different traders coming together at inflection points. So 60 MA is equal to the 20 MA on the 15-minute chart. 200 MA is equal to 20 MA on the hourly chart. If I have those moving averages in alignment with each other, flat, or starting to point up or pointing down, those three time frames are aligned up, down, or sideways. That has now created a bias based on that information as to what I want to do and when I want to do it.
Right. You know, Greg has a saying, same but different. So, you know, declining 20, but I have rising 20, rising 50, and I have a closing breakout, wide range closing breakout, inside bar. We call that a master trader 1, 2, 3. Look to the left, there's a price void. This is a no-brainer setup. Again, would I take this trade without the moving averages? Yes, but these moving averages are increasing it. Flat to down, igniting breakout. So without me even looking at the moving averages, I mean, use common sense. My 20 MA is flat. Why? Because it's just chop going sideways. Moving average, 20-day moving average is flat. Now, this big igniting move, without even looking at it, is going to curl up, start curling at whatever angle. It's going to rise to 20 MA. Okay. So I have a bottoming pattern, short, intermediate, and long term, flat. I have an igniting breakout on igniting volume. I have a bullish time correction. Here's what we call the initial breakout. Here's what we call a buy setup and reversal on support. Now I have rising 20, rising 50, and rising 200. So do you see that this buy setup with these moving averages is more potent? And we could, you know, have fun with a arrow, Greg. You know, I said, okay, well, what if the 200's this and this and this, and they're not going to be as attractive as this alignment with this pattern. Marijuana, we're actually in it in our ETF letter. It's right over here, $4.32. We bought it at $3.50. So this is an old chart, right? But look at these moving averages. So the 200 was up. But look at my 20 and 50 already started deteriorating before the 200 did. Now I have so this is all bearish price action, lower pivot highs, lower pivot lows. So this would have been a place to, well, actually right here, you could have shorted this initial breakdown. This is a sell setup. Here's a breakdown at the 20. And this thing went down to, I don't know, you got to look, but probably to $2. All from this breakdown at $33. Here's a spring being wound, all of these convergings. Our entry was over the red bar. As a red bar ignored continuation breakout, here's a beautiful example of my price void. Because of this multi-month consolidation. You know, this is another subject we're not getting into. Many people would say, yeah, but Dan, look at this resistance over here. So your target is only, 30 cents. And we're like, no, this pattern is going to blast through this because of this bigger void. But that's a different subject. Don's in our green trading room, among many other people. Go to mastertrader.com/green trial. We give a ridiculously low price, $7, to spend an entire week with us. Watch us implement our method in real time, not just talking about these beautiful slides. We get market review, we trade gaps in our tier 1 hit list every morning. We update swing trades, we answer questions all day, scan, trade together. It's a phenomenal learning environment. Same but different. Flat to slightly rising 200. This depth, that was not a death cross, but it's a cross of the 20 and the 50 are meaningless to me. But I now have a closing breakout. So that would have been an initial breakout. Deeper tracement, came down deeper than I thought. A little bullish retest. This was an ETF, I forget which, but this is where we gave it to our subscribers. We missed this original one, and we gave it right over the high where this arrow is. That's where we gave it to subscribers. But do you see how the moving averages increase the potency? This is a bullish turn at the 200 on this support breakout area.
Well, again, it increased the potency because of how we use them.
Correct. Right.
It's not the moving averages.
Right.
It's the method in which we use them that adds to the potency of our method. Now, Dan has said this multiple times because I said it many MTM lives ago, and it's relevant where we say it's the same but different. Now, don't make light of that was being said, because it's another powerful concept. It's the same but different because our method is consistent. So it's the same. The picture is a little different because the moving averages are shaped a little different. The bars are shaped a little different. But as you apply the concepts that we started with on the first slide, and here are the concepts: support, resistance, trend, blah, 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 and so on. You get consistency in what you do, your trades, and theoretically, consistency in your wins, losses. But the money management part is critical because nothing's guaranteed 100% that it's going to work. We're just increasing the probability of what's going to work based on our method.
All right, so we're in here. This is a time consolidation into the 20, not retracing. That's another concept showing relative strength, consolidation over time. You could add to the, if you didn't get in here, this is a brand new setup. Price void, beautiful moving averages. Inflection point here, breakdown failure, 2 red bars ignored, big price void. Bought that stock, had a big move. This is one we did just recently. So look at my moving averages, all down. Big move up is going to drag my 20 up. Okay, that's not an action point. You could have traded this. I didn't see it then. But here, a wide range closing breakout. I now have 20 above the 50, above the 200. I have an inside bar. This is what we call a 1, 2, 3 continuation. And just a beautiful swing trade, price void, nothing to the left. Same but different. Rising 20, rising 50. The 20 flattened out. You now know crystal clear that it flattened out because it's a consolidation and an uptrend. Now I have my closing breakout. I have my bullish 1, 2, 3. Same but different. This one is we actually bought call options instead of stock. I love buying and selling options when they are liquid because they give the benefit of leverage, limited risk. So this one we I teach this in the course, which ones, how much to buy, etc. So we bought these calls, just call options. Technical setup, bull 1, 2, 3 after wide range breakout at the 20 MA. 8-year-old Johnny can understand this. If you have multiple contracts, sell 1/3, here. 6-day trade, 52% return on capital.
I just pointed out I made this box there to point out why is this white, not gold? Because the gold ones are closed trades. Winners or losers, when you go into the member area, you'll see closed trades are colored in that goldish color. This means it was live when Dan captured it.
Well, actually the dollars are here, so it was
You didn't
closed.
move it over yet.
Okay.
Yeah. Once he
Alright.
moves it over to close. There was a question, do you buy on a pullback toward the 20 and 50? It would be one reason. That would be a pullback toward the 50. Again, things have to come together. Support, the moving average, trend. You don't just arbitrarily say, hey, buy at the 50 MA and that's it. That would be foolish.
The powerful uptrend, I can tell here, 20 above the 50, got far away, broke down, it's rebuilding, 20 converging. Now you got my attention. There's still no action item because I'm at resistance. We bought over the high of this 1, 2, 3. This was, I think, Mark actually. Then we sold on the gap breakout.
Yeah, go back to that for 1 second. One thing I want to point out is that everything that we do here at Master Trader and in these MT lives is to bring clarity to what you're doing. So someone that is sitting there right now in the room or in social media, they might saying, well, why are these guys right with a 20 MA or a 50 MA? I was at a webinar the other day and they used an 8 MA or a 10 MA, an exponential one. Well, you can use whatever you want. The shorter the moving average, the more it's going to hold prices. So you might see a moving average that's like that, and it's hugging the prices tightly. And you think, oh, that's the right one. No, it's not. And the more moving averages you put on, the more you're going to get a big mess of bars because at some point, like this broke, and where you're going to see other stocks that are going to hold the 20. So you have to make a choice. And so there's nothing perfect, but I can recognize how this is moving and the distance relatively close to the 20 like that. And the bars being so tight, tell me, another way of how strong it is.
A couple, 1 or 2 shorts, same, just it's upside down. So I have a long-term downtrend. I had flat moving averages. Find me a bearish setup. Well, here's an initial breakdown. I would need to see more on the left before I took that one, but this is a sell setup at the 2050. It's a Master Trader sell setup. Here's a small little M top in a downtrend with a declining 20 and 50. So I'm looking for shorts unless I'm doing some type of climactic counter trend move. Bearish consolidation caused the 20 to flatten out. Where's my, all these topping tails are telling me attempted breakout failed. Wide range closing breakdown, bearish inside bar, price void. It's what we just call a no-brainer setup. But in order to get to be able to confidently say a no-brainer setup, how do you get there, Greg?
Yeah, well, yeah.
To be able to say that's a no-brainer setup, how do you get there?
Well, the multiple concepts about what we're looking at. First of all, you got multiple time frames, all alignment in a downtrend. You got the 20 and the 50 came together, which means there's an inflection point, those converging moving averages. So short and intermediate term traders are thinking the same thing. And those that are long, that were buying this while it was going sideways, are getting nervous. So those topping tails at the 50 MA, or every time it breaks out, they're selling into it. Now, I assume this has got a void. I can't see what's to the left, but once that wide range bar kicks off, that 1, 2, 3 is a no-brainer.
Right. And so I was going to say it in 2 words: education and seasoning. Education, seasoning, same but different. Look at the moving averages. There's my breakdown. Here's my price void. Here's my sell setup after a breakdown. Look at these moving averages. They're just no brainers. Intraday charts. We use the 20. Greg was talking to Don about, the different ones he uses. So here's a consolidation into the 20 for a day trade, late day breakout. All right, so we've been together 45 minutes. This is where I said we would come back to. And now here's the data on top. Remember we talked about all flat here, not trading the crossover. I'm trading price. But here would be a gap breakdown. Here's an engulfing bar, range expansion. These two new closing prices are going to drag my 20 MA lower. This catapulted lower. Look at the distance from the 20 from the 50. So that's telling me, without even looking, that this thing had a big drop. The 20 MA starting to flatten is just telling me it's a consolidation and a downtrend. This could be a consolidation to short lower. So I'm trading price. It broke back out. Now I got flat 20 and 50. Big move up is going to drag my moving averages even more. Got far from the 20. So this is where you could do counter trend moves, sell bear call credit spreads. Broke down. Now I have all these converging moving averages, declining 20, flat 50, flat 200. But I got a closing breakdown with a 1, 2, 3 and a price void. So there's my no-brainer short again. That's it. These were some specials to our we have 3 advisory letters, the ETF I mentioned, the advisory swing and options trader, and this is the weekly options trader, where we simply use our compelling setups, calling short-term tops and bottoms, and we sell options and spreads at these turning points with the intent to collect this premium. Some people say, oh, you can't read charts, and they buy and sell options mechanically, off the Greeks. We disagree. I mean, it's like driving a car blindfolded without having a bias in trading options. So the special is go to mastertrader.com/weekly 30, and it's 30% off the monthly rate for an annual subscription. A different package Greg put together here, 2 for 1 on our advisory swing and options trader, for buy 1 month, get a month free, and then these other goodies that he threw in there. And Greg's going to post the thing on this, mastertrader.com advisory 2-1 for that special. All right, so
these things, once you purchase this, these will be added to your member area. So you're getting 2 months for the price of 1. And if you don't like it, which I believe you will, you can cancel at any time from the member area. You're not locked into anything. No one's going to trap you and you're forcing your credit card to be, that's one thing we do. If you don't like something, your member area, there's a cancel button. You can press it at any time. You don't have to jump through any hoops. So you don't have any risk there. And for those of you that are on, and we have many people on the weekly options trader, if you're on the month to month and you do the annual, it'll automatically cancel your monthly.
all right, awesome. Let's look at charts here for 10 minutes. Yeah, my alarm. I mean, maybe you want to look at Guild. We got him into today, Greg, by long puts. And you can, same thing that we've been doing. Look at the moving averages, look at the pattern.
Good thing. This was someone had asked about this in the green room before we came on here.
Yeah,
climactic kind of setup there. Maybe GILD. Yes, it's in a downtrend. Nothing, it's not converging, but you can see
it's a consolidation and a downtrend.
it tried to go up and it came down, and look at that nice topping tail there, and it's got plenty of room to go down.
Yeah, we have.
Look at that advance. And this, for those of you that are, okay, what are these guys talking about with these words? All these words. What the hell's a price void? I get that a lot. I was like, yeah, can't you just look at the chart? Look, there's no support. That means there's nothing to trade against. There's nothing there. Maybe somebody's got some fib lines or a Ichikumi cloud or who knows what. There's nothing here. There's nothing to trade against. So it's either got to create support or it's going down there. That's the way it is. Let's see. What else could we look at, Dan? I have plenty of things here to look at. Here's Dell. That was a play. There's a 1, 2, 3 at the 20 MA. You can see it's a little far, the 20 and the 50. So not every trade setup that we look at has those converging moving averages, but when they do, that's one tool in your toolbox as to, it held at the 20, and this was your 1, 2, 3, and this thing was great yesterday that it held up while the market was selling off, and tells you that it's relative strength.
Look at Qualcomm is a little similar, but that's where we sold a put spread and we're going to buy it into the close if it's strong.
Yeah. So, and it got bought on the gap down today. You see yesterday, and here's the open. It gapped down and buyer stepped up again. That's a tell. Now, if it closes strong, that suggests it's going to keep going up. Suggests. That's all charts are. You look at multiple things, concepts, trend, support, resistance, prices, a couple of moving averages. Suggests it's going to go up. That means it's a trade.
Right. And you determine, is it a day trade, swing trade, or longer term trade?
Right. And tap, pull back, minor support, 20 MA, wide range bar. Suggests it's going to go up. Tiva. Wow, if you remember, this thing got decimated with those lawsuits.
Yeah, with that, the hedge fund guy.
I mean, it was part of this drug that so many doctors were subscribing, people were taking, and I forget what it was. Anyway, let's come back. Look at here, the converging moving averages. Things were coming together.
Bottoming pattern, sure.
The 50 was declining. The 200 was flat. The 20 was starting to rise. They're coming together here, and you get this pop through here. It's like it's starting to move. Telephone, TT train. Yes, strong uptrend, pullback. Is it extended? I guess, but it's a new all-time highs.
But to us, it's 1 to 4 day swing trade, just manage in between.
Yeah, might keep going up. CEG. Not crazy for that one with that time.
Put spread I do. Yes,
Yeah.
I don't like those deep
Right.
retracements either.
And you can see here, it's a utility. Independent, you can see right there where the way I have this set up, and we shared these layouts with members. This one is metal fabrication, and I believe it's basically a copper stock. So when is NTAP's going to report earnings at the end of May? So we look at all of these things before we recommend, a stock. When's the earnings coming out? What sector is it in? Besides all the technicals to make sure that we're not buying into something and the earnings are coming out in the morning and, Dirty Harry trade. I'm going to get lucky. I'm not looking to get lucky. So there, that's when I would think, Dan, that it could go up. But if we would just to turn into a topping tail at these converging moving averages, or a bearish 180, that would be a great setup. So I'm just going to set an alert at the bottom of that bar.
Sure.
If it happens, it happens. If it doesn't, it doesn't. Lilly, consolidating, Halliburton, oil stocks. That's right. All of this stuff about all of these rate cuts was going to be 6, was going to be 3, maybe it's going to be 1, maybe it'll be none. You've got oil going up, commodities going up, agriculture going up.
Well, Greg, the word long CVX, that's a good moving average example. It's a big old inverse head and shoulder. Where's
CVX, right? CVX.
Chevron?
Yeah.
We're still in that.
And this, is playing what we call catch up. Why is it playing catch up? Because so many other oil stocks have been rising for a while, but when this cleared this and went sideways there, and
Bear sandwich. Yep.
yeah, bear's kind of sandwich, I was like, okay, this is going to go up. You compare it to Exxon Mobil, and you can see why it's a catch up.
Right.
I'm in a laggard, but there's so much institutional buying in the oil sector that they eventually start to look into what hasn't performed, and so Chevron should continue to play some catch up. Clearly, this is coming up to the top of the range there. And look at how it had that one of those slides that we looked at had this downside dip and this recovery and this sideways consolidation. So great little setup. It took a while to get going, but looks fantastic. Like it'll keep going up. Frank is asking about Starbucks, which has not been doing well.
On our short watch list. Yep.
That broke down, and that looks like it's going to keep going down. And what does that communicate to you? Like, we're not fundamentalists, we're not economists, but
Common sense people.
Those coffee addicts won't pay up $4 for their cup of coffee. That means Bidenomics is biting them in the ass. And so none of this is good, what's happening here. And it looks, to me, it's going to get worse before it gets better.
Well, even McDonald's looks horrible all time frames.
Yep, they need to bring back the Happy Meal, as unhealthy as that is, but you get your burger, your fries, and your Coca-Cola for $1. You remember that?
Well, they probably still have it, but it's probably $7 now.
Yeah, absolutely.
Hugo, Riven.
RIVN?
Yeah.
Yeah, you know what? Now, here's one thing. It's like investing and trading has not necessarily have anything to do with what you like. When I look at one of those trucks and I'm like, I'm not interested in an electric vehicle, but those things look pretty nice. But electric cars ain't happening. It's just not happening. That is at near all-time lows. Right. Now, Eric's saying the Happy Meal's $5 now. Wow. Yep. One more. Apple. Is it going to survive or is it going to break down? Right? Institutions are sitting next to their mouses on their hit the sell button. If it breaks down below here, that's going to get kind of ugly. So that's a big watch as to what that's going to do. And do you day trade off a 2-minute or 5-minute? Primary time frame is the 5-minute, Bruce, as I explained earlier. 20, 60, 200 MAs open and close on there. And I can show you. Open. I think that's it. 5-minute. That's not a good setup there, but whatever. I mean, I would just pass on that because that's the spiders. Yeah, that's nothing to do there. Disgusting as far as day trades on the 5-minute. Now, the time you would go to the 2-minute is if you miss the entry on the 5 and it's moving. Now you could apply the same pattern to the 2 if things are moving and it's got room to go, because you're looking for a picture that provides you with an action point. Or you would just buy it with a smaller amount of shares and, manage it accordingly with the bigger stop and smaller shares. It's all about, your risk as to your maximum risk that you want. And so that is it, my friends. We'll be back next week. I hope you enjoyed this. Consider our specials. And of course, be in the green room with us if you're available. And we will talk next week. Bye-bye.
Thank you for listening to Master Trader Live. If you liked the show, we invite you to share this video on your timeline or tag a friend who wants to learn stock market tips. Stay educated with our free chart of the week, a weekly analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs up. Just visit mastertrader.com. That's mastertrader.com.